Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 2. This is Section C3. This is an application topic. Identify and document the significant business processes and data flows that directly or indirectly impact an entity's financial statements. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to superfastcpa.com and sign up for our free 1-hour webinar training. We will teach you the key ingredients to passing the CPA exam. And again, it's 1 hour, it's free, and we will save you months and months of struggling with these exams. So check out the webinar. Also, just letting you know, in today's video, we're only going to be going over 5 questions. Now, typically, the YouTube version has 5 questions, and the member version for SuperfastCPA Pro members has 10 questions. Now, to be honest, in today's video, we're only going to be going over 5 questions for YouTube and for the members because this is kind of a smaller topic that is an intro topic, kind of leads into the next topic in the blueprint, which I'll be making a video on next. So again, in today's video, we're only going to be going over 5 questions for the YouTube version and for members, but just know that SuperfastCPA Pro members typically get access to the full 10-question version when we post it in the members forum. So if you like this and you like our other videos, make sure you check out becoming a Pro member of SuperfastCPA because you will get access to a lot of great stuff, including the full versions of these multiple choice question walkthrough videos. Now with all that, let's dive straight into the questions. Okay, here we are at question 1. Let's just dive straight in. Which of the following is most likely considered a significant business process that impacts an entity's financial statements? Now let's go to the options. Option A, employee training and development. B, inventory purchasing and sales. C, office decoration and workspace setup. Or D, employee satisfaction surveys. Now, if you don't really know what a significant business process is, or really any of the things that we're going to talk about in this video, that's okay. We are using these questions to learn what we're supposed to know from the blueprint topics. So let's go ahead and dive into the explanation to start getting an understanding. Okay, here we are. The answer is B, inventory purchasing sales. That is most likely to be considered a significant business process that impacts the financial statement. So let's walk through this. A significant business process is one that directly or indirectly affects an entity's financial statements by influencing recorded transactions and reported balances. The inventory purchasing and sales process is a core financial activity that impacts multiple financial statement accounts, including inventory, cost of goods sold, revenue, and accounts payable or receivable. Understanding this process is critical for auditors because errors or misstatements in inventory valuation, revenue recognition, or expense recording could materially affect the financial statements. So that's why this is a significant business process, because it definitely affects the financial statements. Now let's go through the other options. While they are important for business operations, they do not directly influence financial reporting in a significant way or in quite as significant a way as the inventory purchasing and sales. Employee training and development, that was option A, primarily affects workforce skills and productivity rather than financial statement accounts. Office decoration and workspace setup, that was option C, may involve expenses, but it is not a recurring financial process that significantly impacts financial reporting. And employee satisfaction surveys, that was option D, relate to human resources and company culture. Remember, we talked about the control environment in the previous video, which do not have a direct effect on financial statement transactions or balances. So again, this is kind of like a base understanding of what significant business processes are. Now let's go to the next questions to learn some more. Okay, here we are at question 2. When identifying business processes and data flows, an auditor should primarily focus on controls that, so let's go through the options. Option A, align with management's written policies and procedures. Option B, appear to be well-designed and logical in structure. Option C, impact financial statement assertions. Or option D, reduce operational inefficiencies and improve workflow. So again, which one of these are the ones that auditors are primarily focusing on? If you don't know the answer, that's okay. Again, we are using these questions to learn. If you want, maybe pause the video and think through this. If not, that's okay. We're going to look at the answer together. Okay, here we are. The answer is C, impact financial statement assertions. That kind of relates to the first question, so that makes sense. Let's walk through this. Auditors focus on controls relevant to financial reporting, specifically those that affect financial statement assertions, such as completeness, accuracy, existence. A control may be well documented, and that was option A, or logically designed, that was option B, but if it does not impact financial reporting, it is not a priority in the audit. It's just not as important as other things they could check, because again, what's the point of an audit? Making sure that the financial statements are presented fairly and accurately. That's one of the biggest points of doing an audit. Reducing operational inefficiencies, that was option D, is a business objective, not an audit focus. And I just kind of want to talk about the financial statement assertions a little bit. We haven't ever talked about them in a lot of detail because they're kind of all throughout a lot of the topics in the audit exam, but I kind of wanted to hit on them really quickly. Financial statement assertions are basically audit checkpoints, ensuring that financial information is complete, accurately recorded, actually exists, is properly valued, and belongs to the entity. Common assertions include, and by the way, these are kind of connected respectively to what I just said. So completeness, existence/occurrence, accuracy/valuation, rights and obligations, and presentation and disclosure. And again, those are all basically connected directly to what I just said, where I was saying, complete, accurately recorded, actually exists, properly valued, belongs to the entity. Those are directly related to the common assertions that I just went over. So again, what is an auditor going to focus on when they are trying to document and understand the business processes and the data flows? They're going to focus on controls and things that have to do with the financial statements and their assertions. Now with that, let's go to the next question. Okay, here we are at question 3. Which of the following is a commonly used method for this documentation? Now, if you'll notice, I just barely read the last part of the question first instead of starting from the beginning, because this is actually a very good habit that you want to be in for test day. When possible, read the last part of the question first, because almost always it will give you some context for what the question is actually trying to teach you or actually trying to ask you. For example, in this case, commonly used method for this documentation. Immediately we know documentation and methods for documentation. We immediately know that by reading the last part of the question first. And then we go to the top and read through it, and we already have an idea of what we're looking for. Now, of course, this isn't always useful, because a lot of times questions are one-sentence questions, or sometimes the last sentence of the question isn't actually very useful, but very frequently it does give you that context. And so you want to be in that habit for test day to help you quickly move through the questions. Anyway, we read that last part, so let's go up to the top. An auditor needs to document their understanding of an entity's payroll process and the flow of payroll transactions. So again, which of the following is a commonly used method for this documentation? Let's walk through the options. Option A, substantive testing work papers. Option B, process narratives and flowcharts. Option C, independent confirmations from employees. Or option D, employee satisfaction surveys. Now, if you don't really know the answer to this, again, that's okay. We are just learning from these questions. So if you're ever confused, that's okay. We're just going to go straight to the answer and learn from this. That is one of the best methods you can use when learning from the multiple choice questions. So let's go ahead and dive into the answer. Okay, here we are. The answer is B, process, narratives, and flowcharts. Let's walk through this explanation. When documenting their understanding of an entity's payroll process and transaction flow, auditors typically use process narratives, flowcharts, and process diagrams. These methods help visually and descriptively map out how payroll transactions are initiated, processed, and recorded in the financial statements. A narrative provides a written description of the process, detailing key steps and controls, while a flowchart visually represents the movement of data, approvals, and transactions within the payroll system. Now, one thing I want to say, and I kind of mentioned this at the beginning of the video, this right here, this explanation, has a lot to do with the next topic we are going to talk about in the blueprints, where it talks a lot about flowcharts and the things like that. So that is why this video is kind of a small intro into the next blueprint topic. So that's why we're only doing 5 questions. But again, this is how they're a lot of the times going to document their understanding of different processes and different controls. Now let's walk through the other options. They do not directly serve as documentation methods for understanding business processes. So option A, substantive testing work papers, are used to document audit procedures and findings, but do not explain the structure or flow of a business process. Now option C, independent confirmations from employees, may be used for audit evidence, such as verifying payroll amounts, but they do not provide an overview of the payroll process itself. And then option D, employee satisfaction surveys. They gather insights into employee morale and experience, but are not relevant to documenting payroll transaction flows. So again, we're talking about the documentation of business processes, of flows, of data flows. So in that case, a lot of the times you're going to be using process narratives and flowcharts. And again, that's something we're going to dive into more in the next video, where we talk about the next blueprint topic that has to do with that. Now with that, let's go to the next question. Okay, here we are at question 4. Which financial statement assertion is most directly impacted by this process? So again, imagine you were on test day, you immediately notice financial statement assertion directly impacted by the process. So as you're reading through the rest of the question, which granted is very small right here, but imagine it was a bigger question, you would be looking for financial statement assertions all throughout the question, instead of reading through the whole question and then finally realizing you were supposed to be looking for financial statement assertions. So that's why you read the last part of the question first if it's available. An auditor is reviewing an entity's purchasing process. So again, what financial statement assertion does this most directly impact in the process? Let's go through the options. Option A, completeness of expenses and accounts payable. Option B, existence of revenue transactions. Option C, classification of financing activities. Or option D, accuracy of marketing expense estimates. Okay, so we talked a little bit about the financial statement assertions in question 2. So if you kind of got a little bit of an idea about those in that question, or if you already know about it, that's great. Maybe pause the video and think through this. If not, let's go ahead and dive into the answer to learn more about it. Okay, here we are. The answer is A, completeness of expenses and accounts payable. So let's walk through the explanation. The purchasing process involves acquiring goods and services which leads to recorded expenses and accounts payable. The completeness assertion is most relevant because auditors need to ensure that all purchases made by the entity have been properly recorded in the financial statements. If expenses or liabilities are understated due to missing transactions, the financial statements could be materially misstated. And then let's walk through the other options, and because they relate to different processes that aren't necessarily directly connected to purchasing. Option B, existence of revenue transactions, pertains to the sales process, not purchasing. Auditors evaluate existence to ensure recorded revenue transactions actually occurred, not completeness. Option C, classification of financing activities, relates to cash flows and financial statement presentation, which are separate from the purchasing cycle. And then option D, accuracy of marketing expense estimates, focuses on management's estimation process rather than the transaction flow of purchases. So again, we learned a little bit more about a business process there, the purchasing process. Now let's go to the next question. Okay, here we are at question 5. How should the auditor document this finding? So let's go up to the top. An auditor is reviewing a company's expense reimbursement process. The company's policy states that all reimbursements must be approved by a manager, but in practice, employees frequently bypass this step. How should the auditor document this finding? So let's go through the options. Option A, rely on the policy since it appears well designed. Option B, document the actual process as observed, noting the lack of enforcement. Option C, ignore the issue since it's not a significant control failure. Or option D, assume all reimbursements are fraudulent and report to regulators. Now, I will say, this is one of those questions, and this happens frequently in audit, where if you actually pay attention and read through the options, at least 2 of the options just sound kind of ridiculous or they're not very good. So very frequently in audit, you're going to be able to pick out 1 or 2 things that are obviously way more likely to be correct compared to the other 2 options. So I think that that's probably the case for this question. So if you need to, pause the video, think through this, but if not, you probably already know the answer. So let's go to the answer to look at it and learn from it. Okay, here we are. The answer is B, document the actual process as observed, noting the lack of enforcement. So again, that one probably was pretty easy, but we need to talk about the concept behind the answer to this question. So let's dive into the explanation. Auditors must evaluate how controls function in practice, not just how they are documented. This concept, known as substance over form, means that even if a company has well-written policies, these policies are ineffective if they are not followed. In this case, the expense reimbursement process requires managerial approval, but employees frequently bypass this step. The auditor must document what actually happens, highlighting the lack of enforcement as a potential control weakness. So when auditors are documenting their understanding of business processes and data flows and things like that, they have to document what is actually happening, if the control is actually being followed or not. Now let's go through the other options because they don't align with proper audit procedures. Option A, rely on the policy since it appears well designed, is incorrect because an auditor cannot assume a control is effective because it is documented. They must verify its actual operation. Option C, ignore the issue since it is not a significant control failure, is incorrect because failure to enforce approval procedures could increase the risk of unauthorized or fraudulent reimbursements impacting financial reporting. So this is going to impact financial reporting, so they do have to document it. And then option D, assume all reimbursements are fraudulent and report to regulators, is an extreme response. While weak controls can lead to fraud risks, the auditor must first assess the severity and implications before escalating the issue. And that kind of has to do with professional skepticism. An auditor is not going to assume that everything is totally wrong just because of one thing, but they're also going to apply professional skepticism to make sure things are actually happening the way they're supposed to be happening. So again, they have to document what is actually happening because that is the point of documenting these business processes and these data flows, to make sure that things actually work the way they're supposed to work, or to point out things that are inconsistent or incorrect. Now with all that, we've learned a lot in just 5 questions, and before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. These are the things you've seen 2 or 3 or 4 times. Maybe you've seen 2 or 3 questions trying to teach you about substance over form, or whatever the case is. You notice these things and you write them out in your own words as the pillar topics from the questions that you just studied. And as you're doing this, each day you're building your own personal repository of the most important things you need to know for the exam in your own words. So let's go ahead and look at the pillar topics for this video. Okay, here we are at the pillar topics. Let's just dive straight in. Identifying significant business processes, that's the first one. Significant business processes directly affect the numbers presented in financial statements, such as inventory, sales, or purchasing cycles. Auditors focus on these processes because even small errors within them can lead to material misstatements. And sometimes they even focus on things that indirectly affect the financial statements because, again, anything that can lead to a material misstatement is something the auditor wants to pay attention to. Next, let's talk about controls that impact financial statement assertions. Auditors pay the most attention to controls that protect the accuracy of reported figures by addressing specific assertions such as completeness, existence, or valuation. A control is relevant if it meaningfully reduces the risk of material misstatements in the financial statements. Now let's talk about documenting processes with narratives and flowcharts. And again, that is something we're going to dive into a lot more in the next video. Auditors typically use narratives and flowcharts to illustrate how transactions move through a system. These tools help clarify who performs each step, where controls are applied, and where the greatest risks of error or fraud may exist. Now let's talk about linking processes to specific assertions. Every process, like purchasing or payroll, ties directly to particular financial statement assertions, such as completeness of expenses or existence of liabilities. Understanding these links guides the auditor's testing strategy and helps pinpoint areas most susceptible to errors. And then finally, substance over form. Again, we just barely talked about that right at the very end there, real versus stated controls. Auditors must document how controls actually operate, not just how they are supposed to work on paper. If a policy isn't enforced in practice, it effectively becomes a weak control, even if it looks strong in written documentation. And the auditor is going to have to document that in their documentation of the business processes and the data flows. And with that, we've gone over everything we need to go over in this video. Again, this is kind of a smaller video. We're only going over 5 questions for YouTube and for members because this is kind of an intro, kind of a starter topic for the next blueprint topic that we're going to cover next. So again, we're only going to go over 5 questions. But if you liked this, just remember that SuperfastCPA Pro members typically get access to the full 10-question versions of these 5-question YouTube videos so that they can get a little bit more practice and a little bit more understanding. So make sure you check out becoming a SuperfastCPA Pro member. And one of the easiest ways you can do that is by actually first going to our 1-hour training webinar on SuperfastCPA.com. If you sign up for that and watch that, you will learn a lot more about SuperfastCPA, and that will give you a great path to becoming a pro member of SuperfastCPA. So make sure you check out the webinar, check out becoming a pro member, and if you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.